Presented by Syntax Advisors.
Welcome to ETF TV News, the weekly show that provides updates for institutional investors on new listings and other updates in the global ETF industry. I'm Debbie Fuhr. Joining us this week is David Mazza, Managing Director of Direxion ETFs. Welcome, Dave.
Thanks for having me.
Can you tell us about the two new ETFs you listed last week on the NYSE?
We listed two leveraged ETFs providing amplified exposure up to 200% on really two unique areas in the market that we see converging in 2021. One is actually the ticker 10G, which is leveraged exposure to 5G companies. So these are the companies that are powering the rollout of 5G in the US and around the globe. In addition, we've launched OPTO, or play on out of the office, which is leveraged exposure on travel and vacation companies. So these are names ranging from Disney to other theme parks and the like, which again, of course, with the reopening that's occurring around the globe, might be some opportunities for traders to take some amplified exposure there.
Can you tell us about the types of investors you expect will use these products and how they'll use them?
So we really advocate leverage ETFs are only used by traders, whether they're institutions or retail investors who have the ability to pay frequent attention to their portfolios. What they really are doing are providing that 200% exposure on a daily basis. So they're not intended to be long-term investment vehicles, but for traders who have the ability to use them and again, monitor them, they can be helpful tools for them to take advantage of opportunities that arise in the market.
That's great. And how have you seen the demand for leverage and inverse ETFs kind of play out over the past year or so?
Well, we've actually seen a significant increase in the volumes of our leverage and inverse ETFs, especially on the leverage side. These products tend to be most interesting to the trading community when volatility increases. Again, when there's opportunities to take advantage of dislocations in the market. And we certainly saw a big one in the previous year and a significant equity market rebound. So we really, again, are seeing usage broaden out as more investors become comfortable getting into the markets and be comfortable understanding how these funds are intended to be used.
What are your plans for the rest of 2021?
Well, Direxion's been on a path to continue to diversify our lineup into more traditional ETF areas, but in particular on the thematic ETFs. So what you'll see from us in 2021 is continuing to roll out opportunistic leverage and inverse ETFs alongside some interesting thematic products that could be used for more medium-term and long-term investors.
The ETF industry globally and in the US has been doing phenomenally well over the past 24 months. What is your outlook for the industry for the rest of 2021?
Well, I think what we find really interesting is that ETFs continue to show their resiliency in difficult market environments, which has remained a question for years. That gives greater confidence for a broader number of investors and types of investors to step into the market and use the benefits of both equity ETFs, fixed income ETFs, for traders, leverage and inverse ETFs, and many of the other exciting elements that are occurring on the active side. That's a conversation for another day. But I think, again, because there's so many great things occurring, the industry continues to mature in really positive ways.
That's great. Thank you so much for joining us.
Thank you.
In other news, last week, there were 33 new listings from 23 issuers on 15 exchanges around the world and 31 new cross listings. When we look at the types of products that came to market, the trends have continued. There were 26 equity products, 6 that were mixed in terms of the underlying portfolio, 1 fixed income. ESG thematics were the main types of products with some China exposure and Hong Kong, and 5 were active. On a year-to-date basis, there's been 667 new listings. There's been 238 closures year-to-date. And as of the end of May, some pretty exciting news. The ETF industry has had 24 consecutive months of net inflows. The assets globally just broke through $9 trillion. When we look at the inflows on a year-to-date basis, we've had $559 billion of net inflows at the end of the 5th month of the year. All of last year, we had $762 billion of net inflows. So we're on track for, I think, a year where we're going to have over $1 trillion in net inflows. When we look at where the money is going, the majority of money, both for this month, May, and year to date, has gone into equity exposure. And we've had more money going into equities this year than all of last year. So we are at $396 billion of net flows into equities year to date, where last year, all of the year, we saw 365. Fixed income has also seen significant inflows at $85 billion year to date. active ETFs have captured 74 billion. So we've seen a significant uptick in the amount of active ETF flows and also product launches. Overall, they account for 4% of the assets. Most of the flows are going into products that are structured as ETFs, and they account for 97% of all the assets. And if we look at the issuers, we saw that at the end of May, iShares has now broken through $3 trillion in their products. Vanguard has nearly $2 trillion. State Street has just over $1 trillion. Those three combined account for 66% of all the assets. And that's very impressive when you realize that there's 550 issuers that are out there. And there's a big gap between those three and the next one. So the fourth ranked firm is Invesco, that currently has 402 billion in assets and accounts for just 4.4% of total market share. I'd like to thank David Mazza for joining us and sharing his insights. I'd like to thank you for watching, and I'd like to thank Syntax Advisors for sponsoring the episodes of ETF TV. For further updates or to see prior episodes, please go to etftv.net. Thank you.
ETF TV News does not provide investment advice nor recommend products.